Hi, and thank you for joining us today. I'd like to welcome you to our webinar, What You Need to Know About Corporate Payment Trends and Best Practices. My name is Heather Ball. I'm the Director of Marketing at Comdata, and on behalf of our organization, I'd like to thank you for taking the time to attend today's event. In the studio with me today are Mitra Aycock, Vice President, and Bob Sneed, Senior Vice President, both from Comdata. We are excited to have them with us to share their expertise. Before we get going, I have a few quick housekeeping notes. We will have a question and answer session at the end of the discussion where you can feel free to ask questions of either of today's speakers. Because of the number of attendees we have joining us, we'll take your questions online at any time throughout the discussion, but we'll save responses from the speakers until the end. To ask a question, click the arrow on the right side of your screen to open your control panel and select the question and answer tab. Type your question into the box and then hit send. Again, you may submit a question at any time during the presentation. Bob and Mitra, if you're ready, I'd love to turn the discussion over to you.
Thank you, Heather, and thank you all for joining us today. We have an action-packed agenda, so let's get started with this overview. Today we're going to discuss the marketing background, along with industry trends and best practices for fleet, corporate, and purchasing card. I think you'll find the discussion quite interesting. You'll find the information shared to be relevant. We're going to talk about a variety of things that we're seeing in the market today and how you and your organization can take advantage of these trends to drive process improvement savings and generate incremental margin improvement for the organizations you're responsible for managing. We would like to take a polling question to get a sample of the audience participants today. What types of card programs does your organization have in place today? So if you will use your mouse and answer those, if you have more than one card program, please click all that apply, and we'll show those results to you in just a moment. We appreciate everybody's participation. And it looks like we have a good mixture of participants today as purchasing card, travel and entertainment, and fleet cards make up the dominant number of participants. We'll show you the poll results here shortly. And a number of you are participating in an e-payables or single-use account program. Just 7% of you have said that you don't have a current program in place today. So the results of our poll, 61% of today's participants are currently using a purchasing card program. 48% of you report that you're using a card program for travel and entertainment expenses. Fleet, 62%. 25% of you are using an e-payables or single-use card number. And the final result, 7%, not applicable. So we thank you for your participation. We'll take a couple of other polls throughout the program today. And without further ado, I'll turn it over for a marketing background and trend analysis by Comdata's Mitra Aycock.
Thank you, Bob. I'm going to start with giving you a case study, just so we can kind of put the numbers and the information that we're going to share with you this afternoon into perspective. And the case study that I'm going to talk to is Pinnacle Foods Group. Pinnacle Foods Group is a leading packaged foods company. Some of their brands that you will all recognize include Vlasic, Duncan Hines, Aunt Jemima, Bird's Eye, even Hungry Man. They are a $2.6 billion a year company, and they are privately held. We're going to look at 3 different programs that they use, the first being travel and entertainment, where their spend is $3.5 million annually, 225 cardholders. And you'll note that their average cost savings per report is $19.24. Why? Why is this so popular? And really what I'm going to explain applies as well on the purchasing card side, where they're spending $16.5 million annually with 150 cardholders, and their average cost savings per item is $40. And if you think about when you move away from paper-based manual systems to an automated expense management system where people make their purchases with the card, and then they reconcile those expenses to the budget through expense management. Lots of savings there. And that expense management system can help to enforce the policies that the company has set in terms of spend. As well, with these type of programs, you're going to have integration into the company's ERP system, which means that, again, manual process is removed. Okay, and then the last of the programs that they use is Virtual Card. Virtual Card we're going to speak to a little bit in this session later on with Bob. Virtual Card you may also hear as e-payables programs. They're really the same thing. And in this instance, what their savings is represented in what they say by not generating a check. So Virtual Card, this is Pinnacle Foods' accounts payable department paying invoices with a virtual card, not a physical card, instead of a check or ACH. And the cost per check generally understood to be about $5.43. Obviously, that's going to vary organization to organization. You'll see here the average transaction size of $2,850, much higher than what we see on a T&E or purchasing card program. But again, when you look at the rebate, basically the company is paid for cardholder spend, and this just being an example of what a rebate could be, coupled with the check elimination savings. These programs have a high return for organizations. Okay. Figured it might help as well just to make sure that we set a like background to define what some of the terms are that we'll be talking about today. Fleet cards, and I think over 60% of you have fleet card programs, so hopefully you understand definition is primarily these cards are used for fuel or fuel and maintenance type spend. There are specific controls and data elements in place for the fleet market, such as entry and validation of a driver ID or a vehicle ID, capture of odometer reading, really meant to help that fuel manager or fleet card manager better understand the optimization of vehicles and fuel costs, etc. Corporate card, you may sometimes hear corporate card referred to as business card. Traditionally, business cards aimed more at that small business segment, corporate cards more at mid to large market segment. But they're primarily used for travel and entertainment. Some may see them as a general purpose commercial card that is issued, but aimed mostly at that T&E market. And lastly, purchasing card. Purchasing card is used for discretionary maintenance and repair, operational type expenditures. And you may, when you hear of purchasing card, you might hear of ghost cards. Ghost card is really a card on file that you would keep with the merchant that you would use for all of the spend that goes to that merchant. Virtual card single-use account is the e-payables type program that we were talking about earlier. Okay, traditionally purchasing card is going to be aimed at that purchases that are $2,500 or less, and you'll see the e-payables programs aimed above that in spend. Okay, next page is really just a graphical representation of the what we term a multi-card kind of solution. So regardless, you've got one card if you're using that card for fleet, for purchasing, travel and entertainment. A couple we wanted to highlight in here as well, special projects. Sometimes we'll hear this referred to as a meeting card, or at Comdata we call our product a workplace solutions card. Basically that's a card that's going to allow you to centralize expenses It's going to allow you to control your budgets, and it's a declining limit card. And then international use, and I'll hit on it in a couple of slides as we look at corporate cards, but finding more and more, particularly with the proliferation of chip and PIN cards across the globe, having special needs for international travel is of greater and greater value. Okay, so let's get on to the next slide, where we see the growth of, and I think there are really 2 points to take away from this, the commercial card market, even though we are all dealing with a weakened economy over the last couple of years, the commercial card market has continued to grow in a very strong way. And secondly, I think it's interesting to see when you see that line above that runs in the general 60 percentile range, that the percentage that the U.S. market represents of the overall global market is significant. So 2 takeaways there. Next slide. This is just a breakdown of the same volumes, but a breakdown by product. And I think it's not surprising to see that since 2009, small business has been the product segment with the weakest growth given our economy. Purchasing and fleet card at 17.9% growth, this being related in most part due to the explosion of that e-payables product suite. And prepaid and benefit cards, 31.6%. We're not addressing those cards today, but find it very interesting to see the level of growth that they're achieving. Okay, and then just to give you some general information around how big are the transactions for these types of different cards, and what kind of interchange rate. And I'm assuming everybody on here understands interchange, but basically interchange is the rate that is paid by the acquirer of the transaction or the merchant side of the transaction to the issuer side, and we being the issuer side. So fleet, you can see here, depending on whether the transaction is diesel or gasoline, and this data is coming from Comdata. We pulled it January through June of this year. Corporate card, a higher level of average spend. Purchasing card growing even larger. And the last, the single-use accounts, this being that virtual card e-payable solution, the highest dollar, because these are invoices that an accounts payable department is paying, and so you can imagine those will be higher transactions. And because that virtual card single-use account is not present, it's a card not present transaction, it generally achieves a slightly higher interchange rate. Okay? All right, I'm going to turn it over to Bob. He's going to talk about the industry trends and best practices for fleet. Bob?
Thank you, Mitra. When we think of fleet, we think of fuel cost and fuel price, and certainly over the last couple of years, we've seen fuel price volatility consume the American landscape in the news and at the pump. When we take a look at just what fuel prices are today, ending 7/23, the national average price per gallon was $3.39. The average cost of a diesel gallon was $3.68. And the prices can vary from state to state. They can vary from neighborhood to neighborhood. And so when you think about gathering fuel mileage and lowering your cost of running a fleet today, there are several factors you want to consider. One of those, when it comes to fuel prices and trends, is how do we improve fuel economy? How do we reduce the number of miles driven by optimizing our routes to the delivery vans or to any business that you're in? How do we optimize, reduce the number of miles traveled while improving our fuel economy with vehicles? So one of the things and trends we see in the market today is the discussion about hybrid vehicles and the use of alternative fuels. The use of alternative fuels beyond gasoline and diesel really are flexible fuel vehicles, ones that can take different fuel types. And we see more and more stations going to the capability of dispensing these different fuel types to meet the ongoing expansion of these alternative fuel-based vehicles in the market. We talk about biodiesel or compressed natural gas, liquefied petroleum, as well as hybrid electric and battery electric vehicles. All of these will play a more significant role in our economy going forward as leasing companies begin to deploy these across large fleets. When we talk about vehicle life cycle management, it's important to take a look at the trends of which vehicles give us the best return. Do we have more cost of vehicle maintenance with a particular vehicle or vehicle type? And what ways can we identify that early on and purchase the right type of vehicle for the fleet that we're operating? We look at insurance cost, and we look at the driver compliance to corporate policy. All of those factors play into the importance of running an effective fleet today. We're seeing some trends in the long-haul over-the-road market for cardless fuel technology. This is the ability to have no longer have a card required to buy fuel. So we're looking at transponder tags that will be placed on each of the vehicles. As that vehicle approaches the fuel island, it will signal the pump that this vehicle is authorized to buy fuel. It can activate the pump once the driver inserts his individual driver PIN or ID number, and the fuel is dispensed and properly recorded to that vehicle. Information is captured at the point of sale. Odometer readings, other driver information can be captured at the point of sale, and that information is transmitted back to you for reporting purposes. So we look at cardless technology as one of those trends that's emerging, and a number of large over-the-road travel center plazas are looking at that technology and rolling it out to fleets as we speak. You have to consider the advantages of closed-loop versus open-loop solutions. The Comdata proprietary fleet card is a closed-loop solution. It's limited in acceptance to a number of stations, but provides very rich point-of-sale data capture information. In fact, the entire transaction stays within one network, and you can customize and configure your prompting at the point of sale to gather additional data elements that you could receive through an open-loop network approach. An open-loop approach is one that typically is branded with a MasterCard or a Visa type of logo. This allows you to go to any station that accepts those forms of currency. Typically at the point of sale, you'll be prompted for a driver number or a unit number and an odometer reading. That information is captured at the point of sale along with the number of gallons and price per gallon and transmitted to you for reporting purposes and data analytics. Part of managing an effective fuel program is taking that information and able to score your drivers and look at the vehicles that have the best fuel economy and the lowest overall mileage cost. Discount programs. Anything you can do to lower your cost of fuel is an important factor in the overall cost of managing a program. It's important to take a look at closed-loop and open-loop programs to capitalize on fuel discounts that are available from merchants. Discounts can come in a variety of ways. A discount may be retail less a discount. So instead of paying an average of $3.39, you'll pay a 2-cent discount or $3.37. That can add up across fleets with large number of gallons purchased. It could be a cost-plus arrangement where you're looking at the actual retailer's cost of fuel plus a reasonable markup to dispense the fuel into your vehicle. And the third type is a combination of retail less or cost plus, whichever's best. It's important to talk to your provider to ensure that you're capitalizing on all fuel discount programs across an entire network of discount providers which are available in the market today. All of these go into effectively managing a fleet program, and fleet cards can often be at the heart of that. So we look at three distinct areas: planning and implementing a program. You want to put the right controls across your fleet. So what is the average tank size of the vehicle? How many dollars worth of purchasing power do you want to provide on a vehicle-based card? Or do you issue these cards to drivers? You want to tie those controls to the prompting information you want to capture at the point of sale. So whether it's a vehicle-based card and you capture driver information, or it's a driver-based card and you capture unit information, it's important to put the right controls and limit these drivers and vehicles to the right number of transactions per day and per week, as well as the number of gallons purchased. You can also put controls in on what time of day drivers can fuel these vehicles. So if you're not operating between midnight and 5 a.m. in the morning, you may want to put a restriction and not allow those to occur. You want to establish an effective fueling policy and train your drivers on what those policies are. You want to utilize limited networks where applicable. It's important to know the routing of your fleet. Once you know the routing of your fleet, you can ensure that the drivers are buying fuel in the lowest possible areas of the city or the region of the country. An ounce of planning can pay back big dividends overall. Now, how do you manage an ongoing program? Well, it's important to manage a program by looking at trends in the data. One thing about a fuel program, it does provide additional information to you so you can effectively manage a program by looking at trends. Which drivers have the best cost per mile? The lowest cost fuel price? Which drivers have the lowest cost maintenance expenses on their vehicle? And how can you effectively train the drivers to be better at what they do? You'll be able to leverage a plethora of reporting tools and data information along with driver scorecards to effectively manage your fleet. The last is program expansion. Once your fleet is up and running with the proper controls, which are monitored on an ongoing basis for exception reporting, it's important to consider, how do I use the card to expand our purchasing power? So consider looking at maintenance as a way to leverage your corporate fleet card to purchase those discretionary business expenses related to vehicle maintenance. You'll also want to consider tracking the life cycle by integrating the information and data on your fleet card into your maintenance system. By providing an information, you can better manage the cost of the vehicle life cycle. You want to also look at other indirect expenses which could be placed on a card to be more efficient and gather all the expenses for complete transparency. All of these programs, when combined, can effectively lower your cost, improve the process, and generate additional revenue streams. So with that, I'd like to pass the baton over to Mitra again.
Thank you, Bob. And we're going to do another quick poll before we move into our next section. A question we have is, what expense management system does your organization currently use? So we'll just take a few moments to capture your responses, please. Okay. And Heather's going to share the results with us. Wow, 34% are using manual spreadsheets. 32% their provider website, which may be a variety of different solutions. 10% Concur, and we threw up Concur on there specifically because they tend to dominate in the large market space. and then 24% other. So as we go through this, I think that particularly those of you who are using manual spreadsheets today, these numbers, this data will probably resonate quite well with you. So we're going to turn our attention to the corporate card and industry trends. First trend, and this has, I think, been going on since probably mid-2000, you see use of that single card that could be used, be it for travel or for purchasing card, for fleet. It's that single card, multiple uses. And about 70% of all companies subscribe to a single-use product. And that's been true since about 2006. Okay, second trend we're going to talk about is utilization of expense management for compliance. And I guess that would be a big opportunity for those of you who are using manual spreadsheets. This is all about being able to set your company policy and ensure that the expense management solution either controls the fact that employees can't submit expenses for out-of-policy transactions, or that there is exception reporting in cases where they do decide not to comply. And really what we see is it generally depends on the company's culture as to what level of control that they want to see there. And we'll talk about on the next couple slides, but you've got negotiation of discounts that you can do through pulling all of your reporting into a single space. Increased corporate liability, and I'm going to address that on the very next slide, but that is, generally you have, it's just a question of, is that T&E card the responsibility of the cardholder or the responsibility of the company? And increasingly so, that liability agreement's shifting to that company. And increased use of chip technology internationally. And we say internationally here, but some of you may have seen reports coming out from Visa and MasterCard, even American Express over the last couple of months. The intent is to bring chip technology to the U.S. as well, probably in the next 4 to 5 years. And one of the things I'd point out on chip technology is that a study that was done back in 2011 by RPMG, who's probably the leader in corporate card studies, said that 38% of all corporate respondents that they polled had acceptance issues related to the use of a magnetic stripe card internationally. So this is becoming increasingly important to that traveling cardholder base. And finally, adoption of mobile tools. And I think we can all relate from a geolocation services point of view, applications that you may be familiar with, like Yelp or OpenTable, where based on your location, or I would have to point out the Comdata Fuel Finder application, mobile app. Any of those are going to suggest services based on your physical location. Mobile tools, obviously, though, could be available to code expense items, to approve expense reports, etc. Okay? And as I said, here's just to show you a little bit of data on what's been happening in that shift of liability agreements. And you can see that the corporate liability has gone from 56% to 65% over just a 6-year period. Okay? All right, so let's talk about some best practices around the corporate card. First is establish and communicate policy company-wide. I think we would all agree that in our own professional lives we've seen a greater and greater adoption of companies who very succinctly and regularly communicate policy towards use of credit cards within the company. Use special purpose cards for infrequent and non-employee travelers. Some examples of this might be, we spoke earlier of a project card or meeting card, it may be called, in our case, workplace solutions card. Those would be opportunities to really control the budget and spend of activity and is not a general purpose card. Another example, prepaid travel and entertainment cards. We're seeing that more and more in the market as well. Best practice, obviously, conduct random audits. So it's one thing to put policy in place. It's another to ensure that that policy is being followed as intended. So there is a need to do random audits to ensure that compliance is upheld. Next is utilize exception monitoring and enhanced authorization controls. And I really would stress this one because I think that particularly early in its life, purchasing cards were looked at as an opportunity for a company to lose control over the spend because you wouldn't know that the card had been misused until after the transaction had occurred. That has changed, and we have an extensive array of authorization controls so that if you only want the card used for certain types of purchases in certain locations at certain times of day, that the issuer can control where the transaction occurs or how it occurs. And exception monitoring, again, set the controls in place. Do you want to stop it, or do you want to allow the transaction to happen but be notified after the fact? A lot of that relates to the company's culture. And then finally, leverage data to analyze spending patterns for vendor negotiation. With the corporate liability shift, what we're seeing is, as well, high, I think the number is something like 74% of companies mandate, and this is particularly true in large market, but mandate the use of a company-sponsored card. And part of that desire to mandate spend on a company card is to be able to have that collective data to understand spending patterns and negotiate special rates. If I know that I'm spending, $60 million a year with Marriott, then I want to use that information to negotiate enhanced rates with that vendor. Okay? All right. So we're ready to talk about purchasing card, one of my favorite cards, and I'm going to turn it back over to Bob.
Thank you very much, Mitra. I think we have one more poll we would like to take. And the question is, how would you best describe the use of purchasing cards within your organization? Of the traditional purchasing cards. So these are the physical cards that you would distribute to company personnel for primarily purchasing maintenance, repair, and operational expenses. Is it growing, declining? Is there no change, or are you simply not using the programs at all? So if you take the time to give us your responses, we'll share those with you, and we'll talk a little bit about why use P-cards in the first place, and does it really simplify the process, and does it benefit your supplier? The results are in, and I think it's resounding that they're growing, and that's a great sign because that is what the trend in the markets are saying, and that's what all the research is telling us as we look out. So thank you all very much for your participation. So when we talk about traditional procure-to-pay process, we know it's an expensive process. The idea that it costs as much to buy a $25 item as it does a $1,000 item And if there's a more efficient way to buy something that's a high volume and low dollar transaction, shouldn't we do it more efficiently? Leave the invoice and leave the check behind. Traditional purchasing cards are a perfect example of how to become more efficient. You simply distribute a number of cards to your employees. You monitor their use of these cards by putting control limits on them. You leverage an expense reporting tool to see visibility and transparency into every dollar spent. It's allocated and moved directly into your ERP system. So it works very efficiently to capture that and properly allocate it to your expenses. But I think one of the things that we want to talk about today is how can you use a traditional purchasing card that simplifies the process, that drives down efficiency savings in the range of 55 to 80% over the traditional procure-to-pay process. You want to start to take a look across your organization on how you're paying maintenance, repair, and operational expenses today. And if you just take a look at your AP file and you look at invoices that you're paying that are under $1,000, this is a great place to start. And you can find that by transitioning to a traditional purchasing card and putting it into the hands of the people who need the goods and services, you can drive out additional cost. Think about ad agency expenses, copier leases, telecom expenses, IT expenses, subscriptions, large entertainment purchases, utility bills, and the list goes on, all of which are excellent candidates for placing on a traditional purchasing card when structured to be a best practice within your organization. Now, is there a benefit to the supplier for accepting traditional purchasing cards? Well, there absolutely is. And the benefits can be very impactful to merchants in this day and time in particular. It helps them reduce their cost. It eliminates the need to create an invoice. Handling and mailing and depositing the payments becomes electronic because they're taking in the funds at the point of sale. It's faster receipt of payment. It improves their cash flow. It gives their customers greater satisfaction, and it means potential staff reductions for them in their accounts receivable department. So there are many, many benefits to the supplier for accepting a traditional purchasing card, creating a real win-win environment. The other thing we want to talk about is electronic payables and how companies are transitioning some of their traditional check volume to electronic forms of payment. The industry trends are clear. 76% cost reductions are achieved by moving away from a traditional check and invoice process to an electronic card-based solution. Opportunity costs here are over $38 billion in North America alone, so rather significant. Want to spot a trend here. Mitra has been sharing the view on corporate cards, T&E cards, and they've been around in this existing market space for quite some time, and people are leveraging those, and it's a fairly mature marketplace. Then we have the traditional purchasing card for maintenance, repair, and operational expenses. And when properly deployed across your organization, can provide great benefit and value to you, as well as revenue generation. Now, the rest of the disbursement space and how we pay our suppliers has been taken up by check. Still, in excess of 65% of all corporate disbursements are done by paper check. Some have been transitioned to ACH, and fewer still to wire. So there's an opportunity to leave the check behind and expand your use of electronic payment solutions. So as advances in technology and the internet are continuing to drive us, we see a new category emerging over the last 3 to 5 years called single-use account numbers. And you can see it's depicted in red on your slide here. Single-use account numbers are 16-digit MasterCard or Visa numbers that are used only one time. So they're ideal for replacing a check. They're fully integrated into your AP environment. So it's simply another payment type A file is sent out to the provider, simply like an ACH file going to the bank. And these single-use account numbers are attached to a remittance advice and sent directly to the supplier. All the supplier has to do is accept the single-use account number just like they would a MasterCard number, a normal MasterCard number, and they have funds in the bank. And you've replaced a check with an instrument that saves you time, it saves you the cost of mailing and distributing a check, the bank fees associated with it, and it generates incremental revenue from your provider in the form of a monthly rebate. So by leveraging a combination of T&E programs, purchasing card, and now single-use account programs, or e-payables, your company can truly drive down cost, generate revenue, and contribute to incremental margin improvement across your organization. The trends shared with us by the Tower Group really show how this emerging technology and the evolution of AP file spend has dramatically changed the landscape of commercial payments. So in 2008, on the left-hand side, you can see the spend by North American companies was about equal between purchasing and T&E. And if you dissected the purchasing card even more, you would see that the majority of the spend, $132 billion, was in transactions less than $2,500. $20 billion was over $2,500 per invoice. And this new AP integrated spend was smaller still. Fast forward to 2013, see how purchasing card growth has exceeded traditional travel and entertainment growth, significantly so. And new AP integrated spend is growing at a faster pace still. This is simply integrating these single-use account numbers into your AP environment for a completely automated solution with complete reconciliation benefits. So we've talked to companies, and this particular study was done by the Aberdeen Group. What are the top pressures that are driving AP optimization in your company? Of those that responded to the questionnaire, you can see that the cost reduction mandate by their executive team was the #1 driver, followed by wanting to remove the paper. Other benefits were difficulty in managing cash. Check fraud continues to be a problem in the American society, and this is one way to mitigate it, and just improve overall efficiencies. But cost reduction was the #1 mandate for driving payment optimization. If you look at the trends here, they speak very loudly. Over 200 companies were asked the question, if we look at your current disbursement volume to your suppliers, what does it look like? And the current volume, 50% of them were done by check in this particular group. 32% were doing ACH, 9% on a P card, and 9% in a wire. What were your trends? Have you changed it over the past 2 years? And what will you do in the next 2 years? The trend is very clear. There's a significant drop in the number of checks being issued today, with an increase in the number of electronic payments, and P card or single-use account numbers, e-payables, are driving significant volume in today's market economy. So if you're not taking advantage of this trend, I encourage you to reach out to your service provider and have that discussion. So when we look at purchasing, we look at e-payables, there's some things that you should think about. So I'm going to read from left to right across the top. First of all, you want to take a look at all of your disbursements and match the right type of disbursement to the card program. If it's a high volume, low dollar transactions and you're paying for MRO items, a physical card would be the best solution. So how do you integrate that? If it's an AP spend, then match that particular card program. Establish clear program goals and track the performance in your company. I can't tell you the number of organizations that we meet with week to week. And one of the challenges that a lot of companies are faced with is they don't establish clear program goals and track performance and share those results with their executive management team on an ongoing basis. So if you're on the call today and you're not doing that, I encourage you to take that action item today as a result of this call. You want to be able to leverage this information, whether it's a T&E program or a purchasing card program or a fleet card. You want to leverage those card transactions into an integrated expense management tool. Get away from Excel spreadsheets, get away from manual processes, and go to an automated solution. It's efficient, it's not difficult to transition to, and it's available to you today. So reach out to your service provider and have that discussion. Ongoing training and communication with your staff internally is paramount. This is a program that lives and breathes day in, day out, month in, month out. So it's important to provide ongoing training and policy information to your cardholders and to your organization. Continue to look into your supplier database and see opportunities to transition away from check and onto a card program, whether it's virtual or whether it happens to be a physical-based program. Continuously review all your new vendor signups. You know, one of the big benefits of paying with a card these days, or a commercial product, is the fact that you no longer have to file 1099s with those merchants. With recent law changes this past year, you now can absolve your responsibility from filing 1099s on these suppliers being paid with card. That alone can save you a tremendous amount of time and headaches in managing an overall disbursement program. You want to look for a company that provides you with dedicated supplier enrollment support. Does your provider help you identify those suppliers and the type of card programs that will best fit the needs of your company and your supplier base? And focus on check-to-card conversion wherever possible. Every check eliminated is $1 to the bottom line on an ongoing basis, plus the revenue generated. And then where you can look for streamlining the entire procure-to-pay process, from invoice, receipt, to payment and disbursement. There are programs out there, and there's been tremendous movement in this market space alone in the last year, away from receipt of manual invoices to electronic invoices. So speak to your provider about that service as well. These 9 best practice tips can save you money and contribute to the bottom line for your organization. I encourage you to take a note of them and act on them today. In summary, we're committed to helping you achieve bottom line quantifiable business results. And the way that happens is through a collaborative exchange of information. This webinar today was designed to be an introduction to you and to the tools and resources available to you that you should be taking full advantage of. We have available to you today, free of charge, best practices guides for fleet, for purchasing, corporate travel cards. If you're not currently looking at best practices and applying them in your organization, that's a starting point. You want to take a look at your existing program and compare it against others of like size and similar industry vertical. We provide to you a free tool today at comdata.com. It's on the front home page, and it says Optimize Your Program. And it's designed for you to look at how you're doing today in comparison to others and maximize your results. Expense management tools, I think the results are clear from the poll. There's a number of you that are still in the Excel spreadsheet mode, and I wouldn't lose another wink of sleep not being on an automated tool. So reach out to us today and let us show you how we can help. 1099 reporting relationships. We've told you how you can eliminate the need to do 1099s to those who are paying with card, but we do know there's still check disbursements and ACH disbursements occurring. And we have a partnership with an organization, Convey, that can help take the headaches of filing 1099s and handling B notices away. And if you haven't looked at outsourcing that responsibility, you should. Other procure-to-pay relationships like invoice receipt electronically all the way to the payment, we can help you with check outsourcing, ACH movements, etc. We should have those discussions. And Comdata is committed to hearing the voice of the customer. So we do it through these interactive feedback webinars that are done on a monthly basis. We offer customer advisory boards and other feedback mechanisms to hear from you on a daily basis as your needs change. So please reach out to us. Use us as your resource to help you contribute to bottom line savings in your organization.
Mitra and Bob, thank you so much for that great information. We have a few questions lined up for you, and in the interest of time, we'll keep moving right along with that. So we'll now begin answering your submitted questions. If you have one you'd like to ask, you can click the arrow on the right side of your screen to open the control panel, select the question and answer tab, type your question into the box, and then hit send. Let's see what the first question we have. Mitra, I'll give this one to you. There was some comments when you were talking about liability and why that was becoming more prevalent. Would you give into a little more details about why we're seeing that trend?
Absolutely. I would say there are probably two major reasons for the trend and shift from individual to corporate liability. First is consumer privacy. I think that more and more consumers are really protecting their own identities as separate from their work identities and are not willing to expose the, obviously if it's individual liability, that person's got to, is, going to the credit bureau and is impacting their credit worthiness. And then secondly would be internationalization. As companies expand and grow internationally more and more, it becomes impractical to rely on individual liability. So those are two major reasons.
Thank you, Mitra. We're getting a few questions about the availability of this presentation and the recording, so I'll go ahead and address that one. You will receive, after the event, you'll receive a link where you can get a copy of the presentation to watch at your leisure. You'll receive that recording. And now we have another question. This one I'm going to direct it to Bob. Bob, Joanna would like to know, what are the pros and cons of using a P card versus paying with an ACH wire EFT?
It's a great question, Joanna. Things that you want to consider. The pros for your company, number one, are efficiency improvement. Efficiency improvement in being able to pay for that and not handle the manual invoice and AP. So a purchasing card allows you to pay for the goods and services at the point of sale or at the point of receipt of services, and you do not have to take in an invoice, have it keyed in AP, have it wait out there to pay at some later date and incur bank and check disbursement fees. So that's a pro. The other pro is that most providers, and Comdata in this case, do provide a financial incentive to you to use those cards. So there is a rebate that's made available to you when you use a purchasing, a travel, a fleet, and an e-payables program. So you're actually generating revenue back into the company by using the product. When we talk about large invoices being paid, what you find is those transactions that begin to get into the $20,000 to $30,000 to $40,000 range that are paid on a typical virtual card or single-use account number, the value to you is the rebate and the savings of the cost or check disbursement. The benefit to the merchant becomes less impactful because they're having to pay an interchange fee to accept your payment. I will tell you that our clients are very successful at paying with e-payable solutions because they have some leverage over the supplier, and most of the suppliers that are taking card have already embedded the cost of accepting card into their business process. So this is low-hanging fruit, and you have a real opportunity to capitalize on it for yourself. Hope that answers the question. I do see that we have one regarding fuel transponders. Are the transponders currently available? That they are. This is a program that's being released as we speak on our proprietary network. So that works very well in it's going to work very well in an over-the-road truck stop environment, and it works very good in a terminal fuel environment. So these are sticker decals, transponders that go onto the truck, and as you pull up under the canopy, it's read by a device that transmits that information and records the fuel purchase. So they are available. You simply reach out to your Comdata sales associate to learn more. what percentage of merchants who accept the Comdata cards are level 3 on a fleet card transaction? If we talk about the closed loop environment of Comdata, it's 100%. 100% level 3, where we're prompting at the pump for information such as driver number, unit number, odometer readings, and we're validating that information. If you talk about the open loop platform, you're looking at about 98% of the stations right now, 180,000 or so, are level 3 capable of prompting at the point of sale. There are some stations that are out there that are not enabled at level 3, and those can be out in some rural markets. They're older stations. But most of your retail sites today in metropolitan areas are prompting at the point of sale, and that is level 3 capable.
Thanks, Bob. That's great. We did have one question coming in. Where can we find the best practices guides that were mentioned? If after the session you're welcome to email us at webinars@comdata.com. We'll make sure those get distributed to you. Again, that's webinars@comdata.com. You're also welcome to reach out to your Comdata representative, and they can share that information with you. Now, we have another question. Bob, I'll give this one to you. Does Comdata maintain any sort of database or list of vendors that accept e-payables? And if so, how is that also managed with those vendors that say that they don't want to take that type of payment?
Comdata does currently have a database of clients or merchants that have accepted the Comdata virtual card or single-use card account number, and that is available to match up against your AP disbursement vendor master. Today, we're finding that there are over 8 million MasterCard merchants in the United States that are capable of accepting the single-use account numbers. Comdata has a little under 100,000 that we've actually paid for our clients today, and we're processing well over $1 billion to those markets. The Comdata Direct network does the ghost card transaction travel with a closed loop? It can. We do have proprietary ghost cards that can travel across the closed loop network and set it up on Comdata's direct network. Let me give you an example. That you have a supplier who you want to pay leveraging a commercial card platform, whether it's a single-use account or a ghost card or a physical card. That merchant can be set up on the Comdata closed loop network, the interchange rate negotiated, and henceforth all transactions that occur between you and that supplier will be on the Comdata Direct network, and you'll be capable of receiving a rebate and an adjusted interchange fee for that merchant in order to get them to accept it.
That's great. Well, unfortunately, while we've got a lot more great questions, it looks like we're out of time, so we'll go ahead and conclude today's presentation. If you're interested in continuing the conversation, we'll be doing a discussion after the session on LinkedIn. You can join us there. If you'll search for the Comdata group on LinkedIn, you can find us, and we'll post. We'll be glad to answer any further questions, or you're welcome to share best practices and tips of your own. If you'd like anyone to contact you regarding Comdata's corporate payment solutions or any of the other information that was presented today, you can enter your name and topic of interest in the Q&A tab in the GoToWebinar control panel, and we'll be sure to reach out to you following this session. As I mentioned, you can also reach out to webinars@comdata.com with any other thing that you need assistance with. And on behalf of Comdata, I thank you for your participation and time.